which we like to term the save and spend system. That's going to help you crack the code to cash flow. What's up, YouTube? What's up to our Zoom audience who registers for this event and can see different experiences on their screen, as well as our friends over there on TikTok. What's up? The Banking Bros channel is where we're live today. We got a couple of channels all over social media where we help you save and spend money at the exact same time. Robert, give them a little introduction here.
Yes, sir. So we're essentially talking about how you can become your own bank. And just some important components of that is we want to be able to put our money somewhere safe, but also, too, it's guaranteed to grow. And we know that we don't have to deal with, like, market volatility. And we can loan against our banking system as well, so we can have tax-free cash that we can use. We want cash flow, but we also don't have to want to deal with the taxes. So we want to put our money somewhere that once it's there, we no longer have to worry about Uncle Sam and the government. We completely eradicated that and got them out of the picture. So that's what we want. We want something, first and foremost, we want it safe. We want it guaranteed to grow our money. That's what savings really is. And then past that is that we want to have liquidity, which is access to cash, but we do not want to have to pay taxes on it. So that's what we're talking about when we're talking about becoming our own bank and the infinite banking concept.
Yes, sir. So we've been practicing this process for about 9 years as a group, and the oldest members of us have, 15 years, actually, to be honest with you. But we've been helping people do this process for the last 6. And we've been on TikTok and Zoom and some of these AMAs. Some of those things are brand new. So if you're brand new, you're in the right place. Can you hear us out there? If you are, double tap on the screen, give us some likes and loves. I think there was something wrong with my microphone a second ago. I just want to make sure TikTok can hear us. Give me a thumbs up. Yes, double tap. Give me a heart if you can hear us out there. We're talking about your life. We're talking about your money. And we're talking about how you can save and spend at the exact same time.
All right.
Can I get a yes?
Yep. Looks like we got
thumbs up.
Some interaction there.
Well, I'm giving them a thumbs up. They might be giving me one, and they still can't hear.
Good.
King,
good.
Can you hear me? Let me know out there. We're going to help you. It doesn't matter if you make $10 an hour, $10 a day, or $1,000 a minute. We're going to make you understand how you can keep those dollars growing and cash flowing for you. What's up, King? Appreciate you. Let me know where you are TikToking in from all over the world. We love TikTok out there. And our YouTube audience, remember that if you click in some of our descriptions and details, you're going to be able to connect with us on our full-length 60-minute presentation. For those of you out there in TikTok land, link in bio. Click that right there. Follow us. And what's up, New Mexico, Louisville, California? King, where in California?
Trinidad.
Yes, sir. Very good. Okay. Now, Robert, why don't you take us back to how you got introduced to this concept, the infinite banking concept? What is it? Is that a good name for it? I've had a lot of more people try to talk recently, like, I don't know if that's the right name for it, to be honest.
Yeah, what I will say is, honestly, I don't refer to it as that as much anymore. I say it become your own bank, because I think that when you say it in that way, because infinite banking has became synonymous with things that are not actually what we're talking about. So if you were to Google that word, you'll see things like index universal life and so on and so forth. So I just say becoming your own bank, and I let people know, what does that mean? Becoming your own bank is coming back to the main functionality of what a bank can do. We're going to be able to make deposits. We're going to be able to have our money grow safely, but also, too, we still have liquidity, right? And how I came across it is I was already inside the market, so I'm a Forex trader, and I trade a lot of different things, not just Forex. Also, too, I was big into investing. So whether it was stocks, cryptocurrency, and a number of different things, I was doing some investing as well, and I wanted somewhere to put my money. Now, at the same time, I was also looking at life insurance, because I understood that it was better to get it while you were young. That's something I had heard. So, I was looking into it, but I also I heard about cash value life insurance, which is a little bit different from the other insurances that I was seeing. And I was like, cool, that's something that I would like. If I'm going to pay into it, at least I can actually utilize it. And from there, going down the rabbit hole of that, I got into, mapping out the Millionaire Mystery, which is the book with Brent Kessler and Chris Noggle. And of course, you're attributed to helping write that book. And so from there, I read that book, and it was awesome. It was a great read. It was very detailed without, opening up the fire hydrant, so to speak. And so I was able to take it in, and it led me to want to know even more. So I scheduled a consultation with Brent. I got on with Brent. Brent put me in connection with you guys, the Banking Bros, and then years later, here I am, man. So my first policy I started, it was it was a low policy, and I was 21, 22 years old, I want to say, and it was just what I could do at the time, right?
Mm-hmm.
$300 a month, and so that's like $3,600 a year. Fast forward to now, we have 5 policies going on to be 6 policies in our household, and so we're going to we're drastically scaling our banking system in a short span of time. I thought it
Right.
would take longer for us to do it.
Mm-hmm.
It's not taking as long. And we'll be putting in a lot more than what we were putting in before, because we understand that every dollar that goes into the system is going to grow and compound, and we're still going to be able to use dollars to get some of the things that we want and need in life. So we're using it as a banking system. We're not seeing it as insurance.
Love it. All right. So if you are going to be on that track soon, you might want to start that conversation with a coach and consultant like someone from our team. The setup is important. There's a couple things that we want to walk and talk you through on this live this afternoon. If you want an infinite banking policy, raise your hand out there, double tap on the screen, give us a comment. If you're wondering what are the components that I'm looking for, you came to the right place. Let's answer a few questions or thoughts we have out here. All right. Appreciate it, King. I know you have to get back to work, you said. Y'all just checking in the middle of the work day. I know that's how it works sometimes for you on a Thursday afternoon when we're doing these AMAs, but y'all need to sneak out, take a smoke break, but also try to, quit smoking so you can get better stuff right here when it comes to your infinite banking policy. Okay, ladies and gentlemen, we're going to walk and talk you through it. Put a 1 in the chat if it's your first time here, or double tap on the screen, give me a heart and a like. We're going to break down the product for you so you can understand the process. How do you become your own bank? That banking word we're going to turn it into a verb, something you can do, not just a place, but also a process. What's a premium on a $300,000 IU? I have no idea. Doesn't matter. Stick with us, though. We are going to help you understand a whole lot more than that. That was an old comment. Some of you probably did not see it and missed it.
I had to show it to you, though.
We're going to get in that. Sure, that's fine.
I know it's your favorite product. Right?
Ladies and gentlemen, speaking of my favorite products here, those of you on TikTok can't see us both, but everybody else can out there. We appreciate you being here. We are going to talk about the product right here. The 3-cup setup that's on the table is going to help walk and talk you through the actual product. Okay, cup number 1, the red one here, is going to help us understand where we put our dollars, okay? When we put our dollars inside this system for this product, they go in cup 1, the red one. Let me explain it to you. We are going to buy something that is guaranteed to give us big pools of money. It's going to grow for us, and it's going to give us a separate pool of leverage cash. And that place is only one thing. Ladies and gentlemen, what type of product is it going to be? If we're going to buy something that produces a whole lot more money and a separate pool of income tax-free growing dollars that we can leverage, any idea what that product is? It is not IUL. If you're on insurance talk right now and you're kind of seeing me at random, what is that product? Guzzy said Dwight asked about you. I don't know.
Don't go down that rabbit. I know what he's talking about.
Got it. Okay.
The Tesla stock. No, that's incorrect. That's not
Tesla stock is not going to give us a separate pool of money to be able to grow and leverage.
That's
and
not a
take
banking
from.
system at all.
Okay, we got Tesla stock again. Somebody put IUL. It is going to be whole life insurance, ladies and gentlemen. That's the first product that we need to understand is whole life insurance. It's the only product that's guaranteed to grow in cash flow. Frank is right with life insurance, and there's a specific type we want to use. That's why we're going to specify whole life insurance. Robert, why don't you remind us on some of the features of whole life insurance?
Yeah, so the main thing is I always tell people is that all the money that you put in, you actually get back. So whole life insurance is the only guaranteed insurance because you're guaranteed to pass away. You're not guaranteed that your house will flood or catch on fire, you crash your car, so on and so forth. What is guaranteed is that you will expire and leave here at some point in time unless you found the fountain of youth. So with that being said is all of your dollars that you put in, the insurance company simply has to take those dollars, grow them with interest, and pay your family at a time that you pass away. Because if not, it wouldn't make sense. If we weren't going to put in a little to get a lot, nobody would have insurance of any kind, right? So it implies that there's going to be some growth there. But the thing is that how many people need money when they're dead? So far, nobody, right? You don't need any money when you're dead, but the people that you leave behind, they will need some money. The sense of what I'm saying is that in between now and the times you actually do pass away, how much could you have bettered your situation, helped your family, gotten out of debt, paid off the car, paid off the house, so on and so forth. What could you have done to leave a legacy in between that time? Because a legacy is not always simply what's here after we're gone. A legacy is actually being implemented and made while you're still alive. So we have the opportunity to borrow against our death benefit to have some living benefits from that. We call that cash value. Cash value is just simply how much of the death benefit that you can use. Now it's guaranteed to happen. So when you take these loans, you have full control. You can, you decide when you want to pay them back, how much interest you might want to pay yourself back. And you keep all of what you pay back. Why do you keep what you pay back? It's because when you take a loan, you're only taking it based on the death benefit. So you're only taking from a larger number that they already owe your family anyways, whenever it is that you were to pass away. So when you pay it back, that cash is going to be reaccessible at some point in time in the future if you were to need to take it again. So we're building cash and we're building wealth. We're not trying to build credibility. Credit, like a credit card, for an example, or even a loan from the bank, when we pay it back, we don't keep any of the money we pay back or the interest. And if we keep doing that, we can, have a nice imaginary score on the screen, and that'll afford us bigger purchases that we can just get into debt again. But how does it actually build our wealth? Like myself, I got out of debt, and now that I'm paying myself back, not only did I get out of debt to someone else, and I'm paying back debt to myself, now that I'm out of debt, I do have a better credit score, and simultaneously, I also got wealthier from doing that transaction. So I always tell people, if you had half the money you spent in your entire lifetime, would you be on the phone with me right now? And I always get no. Some people laugh. Some people say a little bit more than no. But that's the case.
All right. Love it, Robert. That's a great explanation of what's going down, ladies and gentlemen. Hopefully you understood some of that. We're going to answer a question from our YouTube audience out here. Remember, you guys can follow us on our social channels. If you like that game that Robert just spit at you, double tap on the screen for us. Give us some love. And you can get to our YouTube experience on that link in bio. Our YouTube experience buddy out there looks like somebody who might be called like Chucky or something. What's up, Chucky? Appreciate you being here with us on our Thursday Ask Me Anything. She asks, how frequent can you change your premium in a year? That's an interesting question because I probably would be able to have a better conversation with you or give us more updates on what you're asking just in case I don't answer it right. Premium doesn't change ever. Premium is locked in. It's called level premium in whole life insurance because the premium that you pay does not go up, does not go down, does not change at all. You can change the frequency mode. It's called the mode of premium because you can pay annually or you can pay monthly, just like Netflix. They don't care. 1 year you're paying monthly and the next year you're paying annually. It's the same. You can pick that. You can change that, but the dollar amount doesn't change. Does that make sense? Quarterly and semi-annually are also options outside of monthly and annually, which most people do. Great question out there. Appreciate it. Okay, we've got a couple questions here.
Here with my family for the first time. Can you explain using the 3 cups?
Yes, we got the 3 cups on the screen right here on our TikTok audience, and some of you can probably see it elsewhere, like on YouTube. So here we go. Ladies and gentlemen, when we take our dollars... Very good. Meaning, one more. I'm going to follow up with my friend over here on YouTube. So I appreciate this question. I'm coming back to you in just 1 second. All right. Meaning when you want to change how much you want to pay, you don't change it. It does not change. Chuck?
So they're saying, could you change it from paying $500 to, let's say, $300? No, you cannot change the amount.
So reminder, premium does not change. You do have flexibility in your premium. That is going to be detailed to you on a phone call. We hope you get on our call list so we can walk you through that. But the premium the insurance company has for you that will be guaranteed to grow. You have the privilege to give them money because you're giving them depreciating dollars and they're compounding the appreciating asset for you. I know it's tough to figure out, but your premium doesn't change. You do have flexibility in giving them slightly different amounts. So what you're asking is fine. What you're thinking probably needs a little bit of help, and that's why we want to make sure you understand. Got it? They're not going to send you a different number as your bill. Okay, so hopefully that's helpful, Chucky. Get on our calendar, free cash consultation, click the link, or ask more questions right here so I can clarify that for you. Okay, we're going to explain the 3-cup setup. Ladies and gentlemen, are you ready? Put a 1 in the chat if you're here for the very first time. You've not seen us walk and talk through the 3-cup setup. You can see I've got 3 glasses here, red, green, and blue, and our shot glass right here is our 4th one. Oh, you understand. Perfect, okay. Sometimes I wonder if I'm a good teacher or not. Today I am, at least on that question. Ladies and gentlemen, let's take some of the dollars that we earn and let's keep them forever. If we pay ourselves first, you ever heard of pay yourself first? If you pay yourself first in whole life insurance and you give that mutual insurance company premium, they will guarantee you a bunch of paperwork that says they owe you and yours a bunch of money upon your death. When you're blue in the face, they're going to pay out. Friends, family, church, and charity after your homegoing service. I'm a church boy. Okay, homegoing service, they're going to pay this out. No more fish fries, no more GoFundMes. It's going to happen. This is whole life insurance. If you got it, say, I got it. You got it? Okay, because this must pay out. This is their pool of money for you because you gave them some of your money. They have this on standby for your demise. And cup 2 right here in the middle signifies, showcases, and shows us the net amount of the gross benefit. This is the gross benefit. It'll have to pay out one day. And cash value is how much of that benefit we can get to so far. It's how much of the total is paid off, paid for, or paid up. In real estate, we'd call that equity. If you got it, say, I got it. This is how much of their money that they have on standby for you that must be paid you could get to. If you ask them for the death benefit they owe you, they're going to say, you're not dead. That was part of our deal. But you can get to how much of it is paid off so far because we're not on the hook for this anymore. We figured out how to make sure that part is equity. But this part we're still on the hook for because you might die early. Does that make sense? Cash value can be used, loosed, or abused, and your money is still here. And the important part about your money, it's got guarantees on it. The dollars here, compound, grow, don't go backward. Create this separate pool that you can use. And when you use these dollars, your money keeps compounding because it didn't move. You guys got it? What's up, Brian? Got a great question for us. Doesn't whole life insurance generally produce lower returns than other permanent life insurance? Robert, take
this is perfect. So my answer to the question would be, why are we thinking about it as an investment? So insurance is not an investment. It's protection. And so what we're doing is we're borrowing against the policy. If you want to chase returns, why don't you just take cash out of the policy that you're borrowing?
All right, show them what's up. Show them what's up.
Yeah, okay. I thought about that too, yeah.
I'll go back and forth for you.
Cool. Why don't we take from here, go make an investment? I saw Tesla stock earlier, right? Okay. So whatever it is.
How's it doing?
It's bounced back, but not so hot.
Okay.
So why don't you take these dollars and go and make an investment into whatever you want to make it into? And when that investment does great, you actually have a place to put it back here. And that also can help offset your capital gains. Now, the main thing is the interest that you would pay back. Let's say the gains that you pay back.
What you earned because you did an investment.
Correct. It can go here into premium deposits, which then grows the value on your life even higher. Now, what's important is the whole time you had this investment money out, keep in mind that the market can take longer than expected to do what you think it's going to do. All in between that time, your dollars originally that you put in are growing and compounding the entire time. So your dollars here in premium deposits are still there. Meanwhile, you still have the availability to make an investment. So the return that I would answer is, how much can you actually generate? How much can you do? Show me how savvy you are. If you're a good investor, why not put your dollars in, have them growing with guaranteed growth, because you know the markets don't guarantee you anything. Meanwhile, you can still borrow and go make investments into whatever you want, cryptocurrency, stocks, whatever it is you want to do. So honestly, if you use the system the correct way, you can definitely get above average returns because you're not using the system itself as the investment. You're using the system to make the investment.
Love it. All right. Did that help you out there? Hopefully that did, Brian. Double tap on the screen if this is making sense. What's up, Michael? Welcome back. Okay. What we're trying to help you guys understand out there is how to become your own banker by utilizing this system.
How'd you do that?
Hold on. I've got technical issues out here, and somehow it won't let me swipe left to close. Oh, well. I'm not doing it.
I got to figure that out.
So, ladies and gentlemen, remember that whole life insurance, like Robert said, is not an investment. It's now permission to go make investments. Before, you'd have to use, and I'd have to use, and you always use your own money as an investment. Now we're going to save our money. It has guarantees and growth on it, and a separate pool of money to spend. So now there are literally 3 different pools. The one coming one day, the one that's available liquid today, and your money still working for you all at the same time. And you've got your investment going on. All right, suppose, Ryan says, I don't care about the death benefit part. Is it still worth doing? That's why we have a channel, Ryan, because we're not dead. So far, I haven't died.
Nah, we're still
Okay,
here.
so I can't use the death benefit. I'm not dead. Ladies and gentlemen, you don't get the death benefit ever. The death benefit will always be higher than the available cash value because this is the future benefit. This is the equity we can use. The equity will climb. It'll get bigger and closer to this rising death benefit. It just gets better and faster, bigger and stronger, lasting longer for the rest of your whole life. But it's not about the death benefit. The death benefit is a bonus that keeps growing, but it's for someone else.
Yeah, we
Great
want to
question.
do some things now.
All right. Ladies and gentlemen, are we giving you a game out here today?
I saw we skipped one that is easy here.
All right, Rob is out here. He's helping. Oh, Mr. Jonathan West out there on YouTube land. Remember, you can follow us at the Cash Compound. And if you'd like a free consultation with one of our coaches, especially Coach Rob right here, click the link in bio. He's talking to you. You're really helping people, right?
No, yeah, we definitely are helping people. We take a lot of calls. We help a lot of people.
Okay, let's go to YouTube. Mr. Jonathan West, what's up? Where's the best starting point to learn more about this strategy? This is the starting point. Welcome, you made it. Okay, so what we're going to do is we're going to point you toward the link in the descriptions on YouTube for the cash consultation. Get a free consultation. Okay, so click on this or the next video, whichever one. This one is just live right now, and I don't know if Will has got a link there. Oh, no, he's putting it right in the chat right now. Ladies and gentlemen, that is your game, one-on-one. Get your questions answered, absolutely free, by Coach Rob right here.
And here, Mercy720 says something similar. What's the best platform to get life insurance? So it's a little bit different question, but I'll let you take that.
Sure. Okay, appreciate that. Now, Mercy, what's up? Appreciate you. What's the best platform to get life insurance? What you're probably asking is, what type of company and what do you buy from them? That's what I would think you mean by platform. Yes or yes? Okay. We're going to buy, it's a great question too. It's a great question. Number one, there's three things I want you to realize. And number one is we're going to buy this type of insurance from a mutual insurance company that pays dividends. Okay. That's very important. And I'll get back to it in a second. Second, what do we buy from them?
Yeah.
Help me understand. Robert, what do we buy from this company?
Yeah,
what are we buying?
We
Ice
need a
cream?
whole life
What
policy.
We need buying dental insurance. What are we buying from them?
Yeah, we need a whole life policy that is specifically structured for banking. So that's kind of when, well, not kind of. That's when you see like Jake from State Farm, Flo from Progressive. They're not in the commercials for any reason, for no reason. They're in there for a reason. That's why they keep popping up. As the person's life changes, that agent keeps popping up because they're helping them customize the policy for their wants and needs. Well, obviously, you didn't hear Become Your Own Bank on a insurance commercial on TV, and you probably didn't go to work and hear HR telling you to get it either. So what we help people do is we help people customize whole life policies for banking, in which case we're going to make it to where you can maximize your death benefit and access as much cash as possible. So that's what you're going to need. You're going to need a whole life policy, but it has to be structured and designed for banking so that you can utilize it in the ways that we're talking about.
Love it. Okay,
I'll bring it back to you here.
So Robert kind of gave us a hint on number 3. So number 1, let's review. We are going to buy from a mutual insurance company. So we're not actually going to buy from Allstate or Prudential. Okay, we're going to get a mutual insurance company to partner with. It's going to be partnership because of this little cup right here. Number 2, what do we buy from them? We're not buying gum in the lobby. We're not buying tires from their shop in the back. And you may need gum and you may need tires, but we're going to make sure for this process, we're going to buy whole life insurance. Now, I want to dive a little bit deeper than Robert did on that for a second because they definitely sell term. They may sell universal life. We're going to utilize the one product that's guaranteed to grow in cash flow and pay out. And 3, Robert mentioned it. 3 is we're going to customize that bad boy on purpose for the use of cash. We're going to de-emphasize death benefit when we start. We're going to emphasize how much equity we can get to so we can use it. Those are important, and that cannot be done without a coach or a broker or agent who claims and can do it for you and show you on the paper. It is not something you can buy or customize off the shelf yourself. So we hope that you work with us. Click the link in the bio, get on our calendar. What's up, guys? Appreciate you being out there.
It says, Jay doing Rob. Rob is my guy. I don't know.
Let's go.
I'm not sure who that is.
All right, ye old crab dragon. What's good? What company do we recommend? We don't recommend them until we know more about your situation. And then we help you get that deal because we're brokers. So it's not about one company. It's about which company has those things. A-rated, 150 years old, pays dividends every single year as profits to their policy owners. And, well, how's your health? How much money are you giving them? What state do you live in? Those things are all actual secondary, tertiary factors. So we have to talk to you.
How many years before you can take out a loan against the policy?
Great question. If you go to Jake at State Farm, it's going to be 2, 3, 4, 5. If we customize it the way we're talking about on purpose, all that we do around here, what's the waiting period, Robert? Help us understand.
Oh, yeah. So it's
2 years, 3 years, 4?
No, definitely not. It's immediate. We're talking about doing banking. You have to do transactions. You need them to be quick. All right. So we want to have the ability to take loans from our policy right away. More importantly, a little bit more into what your policy can actually do is you can take repetitive loans. Now, obviously, we are big on being good bankers and paying ourselves back, but you control how and when you pay them back. And even if you haven't yet paid back a prior loan, you can continue to take new loans into the future. So that's a big part of having control over your wealth and being able to control your money.
Great
When
question.
does the money
Appreciate
become
you.
liquid? How much do you put in to start? So we kind of already answered that a little bit. You have liquidity right away within the first 30 days of getting started. That's what we mean when we say immediate. How much you put in to start, that's up to you. Jay, Do, and Rob. Rob is my guy. I appreciate you, dude.
You already read that one. You just going back here to get a back rub. He's just trying to feel good.
Cool.
But we appreciate you. We appreciate you guys.
I don't know who you are. I'm sorry. I don't because you don't have your name on there. But I appreciate you. Is this the same or different as Curtis? Definitely different from the MPI strategy. This is not. This is not MPI. You wanna?
I'll take that one a little
Go
bit.
down that rabbit hole. Okay,
yeah,
cool.
I'll help them. People need help out there, and unfortunately, we strongly believe that what Curtis Ray is doing is very volatile and harmful for most people. Okay, and boy, does it look good, does it not? It looks great. And if I didn't know anything, boy, would I have jumped on that train. But beware, buyer beware. Okay, so ladies and gentlemen, we're talking about utilizing a guaranteed, growing, and cash flowing income tax-free asset for the rest of our whole life. What Curtis is using as the MPI system. The MPI is what you do, and it comes from a product that's not guaranteed to do those things. That's what you need to understand. Whole life insurance is guaranteed to grow in cash flow. He is utilizing an indexed universal life insurance policy, which you'll see. If you follow us, you're going to see everybody else talking about that, and it is not guaranteed to grow in cash flow. And I can prove it to you by reading you your own paperwork if you have one. I'll just read it to you. Yeah. Whole life, I'll read you the paperwork and prove that it's going to compound and grow. IULs are completely different products, and they're packaged in the paperwork to a commoner like me and Rob and you to look like it's the same type of thing, it just with better growth or returns.
Yeah, it's
show, not that at all.
It's going to show high valuation and projections. Yeah.
So no, we're not going to do it. Okay, Jack, what's up, Jack? How is the money immediately vetted so you can take that? Doesn't make sense. We have equity. Jack, let me explain it this way. It's very, very simple the way I'm about to explain it. Okay, Jack, have you ever bought something with your money? Yes or yes? Jack says yes. Okay, I'm just going to assume. Jack has bought something with money. Now, the thing that you bought, Jack, cost $14.99. And you handed the cashier $20. You didn't hand them $14.99. You handed them more than you needed to, so there was immediate change. There you go. That's how we do it. We're going to actually build you a policy that took... We're suggesting here, it's our opinion that you should be well informed beyond what most of you are asking me if you're going to get an IUL. We don't suggest it, and we never would suggest it for infinite banking. IULs are doing something different, and they're taught that they're just a superior product to this for the same purpose. That is a lie. That is not true. That is untrue. Okay, so Jack, remember you bought something with $14.99. You got it, but you overpaid for it, so there's $5 and change. But you still have a policy because you still paid for it. What you bought at the life insurance company is a pool of money. You bought a bunch of paperwork that's a pool of money. You overpaid for it, if you want to say it like that, or overfunded, more of a halfway technical term. So we have change to use. We're going to set that up automatically so you can get to cash value. It's
taken out against your cash value taxable.
I'm sorry. No. It's taking out your cash value. No. Remember, this is a loan. Loans are not taxable. Great question out there, Brian. And also remember that this pool, that's the payout pool, the death benefit pool for your family, is not income taxable. Not at all. Your family's going to get this. Just going to get it. They don't have to report anything. This is how life insurance works. This is how car insurance works. And so we are borrowing against, which is not taxable, a non-taxable pool. double no reason to be taxable. Okay, it is not at all. What's up, Jonathan? We see you. Jonathan got on our calendar for a consultation call. We appreciate you, Jonathan. Where are you out there? There we go. Sean on YouTube. Remember, you can follow us by clicking here on YouTube. Go to the link in bio. What's up, YouTube? Our YouTube channel is called The Cash Compound. It's our entire conglomerate here. We are agents and brokers within the Cash Compound, and that's our YouTube channel. What's up, Sean, out there? Where are you, Sean? Let us know. Sean says, all IULs are smoke and mirrors. Robert, give us a response to that.
Yeah, so and I hate I didn't get the other side of the video. I never got it sent from him, but I will be uploading what I do have. I actually did an interview with Curtis Ray, who is the founder of the MPI strategy, which is utilizing IULs. And what I can say is this, from words out of his own mouth, is that yes, it is essentially what he just described, smoke and mirrors, because it's projecting what can happen. And the reality is the market is irrational. We don't know what's going to happen. If you can tell me what the stock market looks like 10 years from now, 5 years from now, 20 years from now, whatever the case is, cool.
Tomorrow?
Yeah, but what I can tell you is I haven't seen them. I've been in the markets for a little minute now. I haven't seen a consistent 10% every single time. Matter of fact, we just saw it in the past 3 years. The market did not give you, if you put money in the last 3 years, the market did not spit you out 10% year after year. So when it comes to an index universal life policy, the issue is that it only is showing you sunshine and rainbows, and it's not actually showing you more realistic valuations of what can happen inside the policy. Let's see here.
So appreciate that out there. And what's up, Sean? Shout out to Sacktown in Sacramento. I got a sister out there who's in college just north of the city.
Does your credit score or history affect the equity within your life insurance policy?
Mercy, what's up? Appreciate that question. Your life insurance is a guaranteed contract between two private parties, you and the insurance company, and therefore, since they owe you this money, and this is private and has nothing to do with third-party institutions or license, no, not at all. The question is, does your credit score or history affect the equity? No, not at all. They owe you this money. They're already on the hook. You've already signed the documents, and they are the ones that have to pay out. They have to pay out. Great question.
88 finger. I'm sorry. Can you convert an IUL to a whole life?
Great question. Actually, yes. Okay, let me give you the stipulations around that. Can you convert an IUL to whole life? Can you convert a whole life to an IUL? The answer is yes. And this pool of money in the middle is what moves around. Okay, so it doesn't matter what you paid into it. The equity value, cash value, or surrender value, depending on which product you're using or who's talking to you, it's this cup. That's what can be what we might call in the 401k world rolled over.
Yeah.
Okay, that's when most people know what I'm saying when I say roll over. That is what can be rolled over into a new, better, different policy if you want it. Okay, insights on Gerber life insurance. It's fine. It's guaranteed to pay out one day. Gerber, as far as I know, is always whole life insurance, but it's not built for banking. Yeah. So that baby is not going to have anything here for the first couple of years that you can utilize. But is there something wrong with the policy? No. Are you going to earn dividends in Gerber Life? No. I believe now the Lafayette Life Insurance Company actually owns the Gerber policies.
Oh, I wasn't too familiar with that. But what I do know about Gerber Life is I know that over time they still, for an example, if you were to put a banking policy on a young adult, your child or whatever, it's not nearly going to be as much cash value. Like, so if
no,
you're trying,
not at all.
You know, if you're trying to send them to
you
college,
can't do it. Yeah, you can't do that stuff with the Gerber. Is there something wrong with whole life insurance? No, it's guaranteed to always pay out. But that's why the other things that I mentioned, Mercy, you've been here for a few minutes, that I mentioned are important. What company did it come from? What levers did we pull? Was there going to be dividends in the future? All that stuff is important. Okay, so great question. Appreciate you. Okay, what's up, Brian? Website seems glitchy. Did I just submit a scheduled one-on-one chat? What's up, Brian? Let's check. Brian, I see you. Brian is out there. What's up, the 321? We got you, Brian.
Yeah, you're on.
All right, Brian. We got you. Don't worry about that at all.
How long has Zandler Spur wants to know, how long has your company been around? And I'm assuming here we're talking about the Cash Compound. So how long have we been around?
Yes, good question out there. So remember and reminder of a couple things. And I love how talking heads like myself and Robert, we can actually see your questions. We could avoid them. We don't. Double tap if you're learning something and realize we're not avoiding anything. But at the same time, just in case you don't like us, we can't hear you. Okay, ladies and gentlemen, we have been doing this and helping people for 6 years, 6 years and 3 months or something like that. I've owned policies myself for 8.5. And our company is the middleman. There's always an agent in the State Farm commercials. It's Jake. There's Flo at Flo at Progressive. Progressive or State Farm or any of the companies we utilize are who's guaranteeing the policies. You just need an agent to set it up for you, be in the middle and get that paperwork done. So it's not about any credibility from me at all. It's about what that contract is. So remember, we're going to be able to look at that contract and be able to talk about what's guaranteed to you if I'm dead or alive.
You know the big difference between us and like Jake State Farm or Flo Progressive is that they work for Progressive and State Farm. We actually are catering to the customer or the client that comes through. So we are not agents and captive to a particular company. Their first and foremost responsibility is to that company. Well, our first responsibility is going to be to you as the policy holder. And we're trying to put you in connection with the insurance company that will, of course, like he was saying, pay dividends. And you have a guaranteed cash flowing asset when it comes to whole life insurance.
All right. We see you out there, Kevin. What's good? Kevin just actually got on our calendar, at least into our system. So I appreciate you. Kevin, I'm assuming you're live somewhere out there. Appreciate you joining us. Marcus says, bro, where you been? Sometimes, hey, it's tough because I've had a hard time for the last 2 years and actually warning you guys before I go live. So maybe you've just missed me. I'm glad that you're back on here, but most of the time, you're going to have to be surprised. So click the link in the bio, click your notifications. We'd love to help you grow and flow your money. And that's what we do here. What's up, Xander? Another question here. Oh, Jack says, can you start policy with funds from an IRA? That's where you cannot roll over. Jack, got it? Okay, so you cannot roll over qualified to unqualified. Qualified means there's going to be a taxable event somewhere. The government gave you some sort of stipulation. That's what you do at work. Unqualified. No taxable event. If you do it right, you ain't got to worry about all that. Life insurance. You cannot roll from qualified to unqualified, and there's no need to roll from unqualified to qualified. Okay? All right.
But hypothetically, if that was a personal financial decision that you made to use funds from your IRA, I've seen people do it before where they take funds from a qualified plan to start a non-qualified plan.
Yes. So just remember, you can take that money and have your taxable events or your fees or your penalties, right? If you're not 59 and a half, you may have a penalty. You can still take that money out. I'll give you my personal experience. I did. I took money out. I zeroed out a qualified plan, took the hits, and then got my money moving, growing, and flowing.
Zandler Spur, can we get 90% loan after the first 30 days? How much can you take out and how many times? That's multi-factor. Right?
That is multi-factored, and we answered all of that literally in the visuals. So you can watch our save and spend video and see, okay? It's not going to give you every scenario, but let me give you the highlights as you click that link and get on our calendar. Watch that video. We built it for 60 minutes. It's got numbers in there.
Too many times today. Make sure you click the...
I said it a few times. Yeah, I've said it a few times. Hopefully, well, you got 3 people who jumped in. Okay, so far. So appreciate you guys out there. Okay, so you can borrow whatever is here, and that is customizable. Okay, we're going to show you a number that is not 90% in our videos. That doesn't mean you can't get to 90. We're going to show you a number that's not 90. In the long run, 90% will not be more beneficial for the growth of your policy. There's nothing wrong with it. I'm not saying there's nothing wrong with it, but I am saying there's a few things not right with that. It'll always go up and it'll always get bigger, and we're not going to show you something that is that steep. Second, that money, whatever is there, will be there available immediately. Rob said that within 30 days. Okay?
And the saying magician, if you wouldn't mind putting your question back in there one more time, because that's a little far up.
Yeah, if you don't mind, if you don't see your question got answered, we're not avoiding it. Hit us again, somebody else tag, somebody else's copy paste, something you want to know, somebody else asked. Totally fine. All right, Marcus, we'd love to chat with you. Marcus, if you ain't clicked nothing yet, baby, go ahead and click the Banking Bros right here. Click the circle, go to our regular TikTok page. Lots of TikToks, you should watch them. Click the link there. Okay, we're just going to stay live for another minute or two. Appreciate you guys being here this afternoon. It's very, very likely, highly likely, I'm live again first thing in the morning. If you're going to be with us tomorrow, go ahead and follow. If you're getting game from us, go ahead and click share in the bottom corner. It'll help you and others find us better. Click share in the bottom corner, I think, for most of you out there. What's up, YouTube? Any more questions out there? Only a couple more minutes. And click follow. The Banking Bros. Go ahead and follow us. All right, appreciate that share. Thank you, Toby. What's up? How many policies can you own? There's no limit on the number of policies you can own. Zero limit. I'll get more specific for you so I can be more helpful. Okay, you have a human life value. There's a limit on how much death benefit can be attached to you because you are worth something out there. It's called human life value. Taylor Swift's and Beyonce's is a lot higher than yours. They can have a lot more over here. How many policies it takes to hit that number doesn't matter. Also, you can own policies that have nothing to do with your human life value. I own policies on my kids.
How many do you have in total?
Me, I have 10 policies. I might have 9. I think I have 9.
Going crazy.
I think I have 9. Those are the ones I own by myself. I really have more than that because I own some with my brother. But, okay, where we both own it. What's up, John? We see you out there, John. Appreciate you getting on our Mercedes. What's good?
Oh, okay.
We got 2 more folks.
I remember this question now. Best
have clicked the
policy
link?
for cash value and what can I do to utilize the maximum amount of value? Yeah, so the best policy, obviously, that we're suggesting for cash value is cash value whole life insurance. So it's not just getting cash value insurance. It's about guarantees, okay? So whole life insurance is the only guaranteed insurance, and you will have guaranteed cash value. So we would suggest whole life insurance, but not just any whole life insurance. It needs to be with a mutual company and designed for banking. If you want us to help you through that process, click here and get on the link. Go to the link, and so you can get on the calendar, and you can talk with one of us one-on-one where we can help you through that process. Because obviously, like I tell people all the time, if you've seen this on a commercial or if you heard about this at HR at work, you wouldn't be on TikTok trying to learn this right now. So obviously there's some, it's specialized and it's more to it than the surface of what we're talking about. So it needs to be structured for banking. So click the link in the bio.
All right, Jack. Jack says, look, we have run out of opportunities for time slots today. Jack, we might get lucky. One of us might be able to do something special for you. Hit us in the DMs if you want to talk today.
Or you
Jack,
can always get another.
The first question we're going to ask you is, did you watch the video? If the answer is no, we're going to say, get on our schedule for tomorrow. Okay? So, Jack, make sure you watch that video. We got it for you guys out there. John Harp's Mercedes, Brian, Kevin, Jonathan, Frank, maybe Frank as well. Appreciate you guys. The Super Saiyan magician says, I have an IUL currently, but I don't think it was billed properly. First off, we tried to help you understand that the process of banking is not friendly for IULs at all. We wouldn't suggest it at all. So remember what we're saying, because you're going to hear all the IUL people, bonk heads. I got invited onto a IUL heavy podcast. I'm going to do it in about a week. And those people are going to spit game all day and say, this IUL is built okay. This one's not. And I'm going to say none of them should be.
You got invited to this?
Yeah, this person has been following me for a long time. Yeah, and I follow them as well. And I don't comment because I'm trying to play nice. And at the same time, we're all trying to do the best for people. And I'm never going to use an IUL for infinite banking. Ever. Yeah. I wouldn't buy it for this, so I'm not going to use it. All right. Would Navy Federal be a good start? You're not going to find it by looking for it there. You're going to have to find the people, Mercy. We tried to tell you that at least 3 times in the last 45 minutes. Navy Federal is going to be a great place to get a Visa card. We're trying to build a banking system that
if you want to build some credit.
Yeah, I mean, go ahead and put your savings. Yeah. You need a savings account there and put $50 in it so you can swipe on Amazon for Christmas presents. Fine. You're not going to get a Visa card from your life insurance company, but I am not going to build wealth with that. Okay, appreciate it, Jack. Yes. All right. We're going to get you tomorrow. Somebody's got you tomorrow. Maybe me, maybe Rob. Peace, ladies and gentlemen. We got to go. Appreciate everybody out there on the Cash Compound YouTube channel, our Zoom audience every Thursday on the Ask Me Anything experience. We love you guys. Thank you for being here and finding us at random a little bit here on the Banking Bros channel when we went live on TikTok. We love it. All right, we're about to sign off here. Yeah, we got you in all 50 states, baby. We got you. Puerto Rico, we got you. Okay, Canada, we got you covered. We'll send you to somebody in Canada. All right, you're welcome. Peace out, everybody. Oh, now I can't get off because
you might have to close the whole entire app.
I'm gonna have to close the app, ladies and gentlemen.